Hi there, Geoff Degener here with Ausperity Private Wealth, and this month I'm hosting a webinar that's specific to credit cards and, um, you know, the overall concept of credit and using credit responsibly. I'll also talk a little bit about, how we can incorporate, our kids and beginning to develop behaviors and helping them understand, that credit in one respect is kind of a necessity. Building up a credit history, building up a credit score, will help them with their first home purchase, purchasing an automobile. It's really, the leading factor in beginning to get your kids as independent as possible. Without much of a credit history, you run into situations where you end up having to be a co-signer on their loan, whether it's student loans or their first home. So again, getting the kids as independent as possible and developing behaviors that they'll teach their kids one day. So how to pick the right credit card and maximize the benefits associated. It's the next one kind of says it, but it's kind of a game in itself. So there's a lot of rewards and points associated with using credit cards. And I mean, don't get me wrong, credit card companies, they are not, they are for profit, let's say. They make a lot of money, and it's because, people have behavioral problems where they spend the money before they actually have it. And it creates this compounding effect. So I think, managing things responsibly, taking it slow, trying to manage your credit utilization as best as possible. And it doesn't mean that you have to use credit cards for everything just because of the points. Especially early on, I think there should be somewhat of a middle ground where you're leveraging credit, you're paying off the credit card monthly, you're not getting you're not overdoing it all the way up to your credit limit. And, I think over time you'll begin to understand that it is a manageable feat, and you can begin to manage the point structures or reward systems to a better degree. But lastly, I'll talk a little bit about how to teach our youth today about using credit cards responsibly and some strategies involved there. Credit. What is credit? So credit is the ability of a customer to obtain goods and services before payment based on the trust that a payment will be made in the future. What is a credit card? Credit card is a small piece of plastic, sometimes metal, issued by a bank or business, allowing the holder to purchase goods or services on credit. Credit score. A numerical rating represents the perceived value, the perceived ability of a person or organization to fulfill a financial commitment based on the analysis of their credit history and current financial circumstances. Credit score. You see over here, got a number of different ratings, and the actual score becomes somewhat impactful, but they group the score based on certain criteria and from very poor all the way up to exceptional. Credit score factors. So payment history, of course, that makes the most sense and probably is one of the more impactful. So a late payment can really, hinder your score. Multiple late payments from multiple different issuers can do even more damage. So making sure that you're at least paying the monthly balance or minimum monthly payment is important. Debt total amount. So any large debts may be considered high risk. Even those that carry those debts, period by period. So only paying the minimum payment, potentially even increasing the debt load can have an impact on the downside. New credit cards, so taking out multiple cards, in a short period of time, that can be viewed as risky behavior. And then credit utilization ratio. And this was actually new to me, but there's a 30% rule. Using more than 30% of your available credit can actually have a negative impact, especially if that's over a prolonged period of time. Credit utilization. If you don't use it, you very likely may lose it. And that is credit score. Some tips to help And I've talked about some of the basics, but pay off the balance every month. That's first and foremost. Use it for needs, not wants. Never skip a payment, at least pay that minimum. Use your credit card as a budgeting tool. And a lot of credit cards and online, credit card companies, they'll have budgeting tools built in that will help. It's not always right there in your face, and sometimes you have to search for it. You can also use some of the features to, understand spending behaviors, between you and your spouse, if they're comfortable with that. Understand and leverage the rewards. So it's truly one of the major benefits of using credit cards. I think, the ability to buy now and pay later, it's only relevant because of the rewards. Otherwise, I would recommend use cash. Stay under the 30% credit limit, of course. So some strategies I'll talk about and have touched on, but adding a child as an authorized user, even at a young age, helps them establish a credit history. Now, it doesn't even necessarily mean that, they're the one using the card. I mean, you can be the one using the card with them, but I'm talking before they go to college, maybe they're in high school, you're not comfortable in giving them a card outright. But by having them established as an authorized user, and of course, you're going to want to make sure that you're not late on any payments and overstretched in debt for that matter, because that could hurt them. But that's beginning to build up a credit history. Second, the credit cards that provide the most rewards in the form of points, typically are the cards that have an annual expense. That doesn't mean it's a bad thing, but we'll talk about that. College students, they actually have cards that are specific to college students and have rewards programs based on, typical spending items that college students would run into, and leveraging the sign up bonus. So again, for those that do understand how to use credit cards responsibly, I urge that sense. I know a lot of our clients do. I'd say understanding the sign up bonus can be impactful if you do it the right way. So one thing that I've learned over the years, I've talked to some clients about it, but most credit card companies, they have limits on how many times you can actually cash in those large upfront bonuses, and typically they come with once you've hit a certain spend limit within the first 3 months. Now, a lot of the retailers, a lot of the card companies, they'll allow you to take advantage of this every 24 months, every 2 years. American Express is the one exception. They are a once in a lifetime situation. So I say that not from the sense of get the card with the most points, but know that if you're switching from one American Express to another, it shouldn't be solely based on the sign up bonus if you've already taken advantage of one in the past. Married couples, okay. And in most cases, some of the things I'll talk about in later slides will focus on the fact that it's good to have more than one credit card, from the perspective of certain types of expenses. And typically in most situations, for those that travel maybe once or twice a year, it's good to have a travel card and some type of travel card. I'll talk about them shortly. And then a separate card that's geared towards, most of every other, everyday expenses, let's say. And if you are a married couple and let's say, I get a credit card, or let's just say I get a Chase Freedom credit card and put my wife on as an authorized user. Simultaneously, we get a Chase Sapphire Reserve card, with my spouse, or maybe she signed up for the Chase Sapphire Reserve and I'm the authorized user. Then we will only get the rewards or the sign up rewards for the higher rewards card, if assuming both cards hit that spend limit. It's to prevent from double dipping. One way around this is to have one spouse, let's say myself, sign up for the Chase Freedom card without my significant other as an authorized user. At the same time, she signs up for the Chase Sapphire Reserve. After the bonus period ends and the bonus rewards are issued, we then add each other on as authorized users. In that case, they're not going to take the bonus rewards away. And, after 24 months, we reassess. In the case of an individual, or maybe you have a situation with a married couple where they're, financially independent, and each individual has two separate cards. Well, in that case, you can use one credit card company and another credit card company. Maybe you have a Chase Sapphire Reserve and a Capital One Venture card. They're not going to take, the bonus points away from you, and after 2 years, maybe you flip flop. So it's a situation where you want to maximize the benefits provided. Those sign up bonuses, they can be worth anywhere from $200 to $750, depending on what it's spent for. And I'll talk a little bit about that here shortly. So picking the card that's right for you. I've segmented credit cards into, let's say 3 main categories. You've got your cashback cards. Those are cards that, they have enhanced bonus points, meaning depending on what you buy, you could receive 2 times, 3 times, even more, 5 times the points. But generally, the rewards are converted to cash, and every point is equivalent to 1 penny. With your travel rewards, your enhanced spending items are going to be anything travel related, and the enhancements are even greater if the travel related cost is incurred through that company site. So if I'm going on a trip and I have a Chase card and I book that flight or my flight through Chase's travel program, then I'll likely get somewhere between 5 and 10 times the points just by booking it through Chase. Same with, Capital One. They want you to book the trip through their travel program, and they'll provide you with enhanced points to do so. On the other end, when you're redeeming points, if I redeem points from a travel card and redeem it as cash, same goes. 1 point equals 1 penny. But if I redeem for airfare or a hotel, 1 point may be 1.5 pennies. So you get a 50% enhancement. Some cases it's a 25% enhancement depending on the card. So your, higher cost cards, the cards that are, $250 to $500 a year annual fee, may come with that 50% enhancement versus the lower cost cards, lower cost travel cards, the ones that are around $95 to $100 a year, they're going to give you that 25% enhancement. And then you also have the low interest credit cards. Those cards are typically ones that you can, transfer a large balance to or consolidate multiple cards to, and you'll pay 0% over a fixed period of time. Or you can purchase something with that card and stretch that payment out over a fixed period of time at 0%. So those are cards that really typically don't have a rewards or a points-based structure. They're geared specifically for low interest. And to that point, the cards that do have rewards and the ones that have the even, more lucrative rewards programs tend to have higher interest rates. So it's even more important to make sure that they're paid off on a monthly basis. Here I'm focusing on cards that don't have an annual fee. And again, the cards that don't have an annual fee doesn't make them bad cards at all. I think everyone should have a card like this that's good for everyday use. It does provide some flexibility based on, different items that you purchase. You don't want a card that really only gives you, enhanced points for one specific item. Like a store-specific card, which I'll focus on later. That store-specific card is only beneficial for buying something from that store or that retailer. But Chase Freedom, Discover, it's actually called the Discover It card, and the Capital One Saver card, all have sort of a different array of enhanced points programs. You see 5%, 3%, 1%. The 1% would be on everyday purchases that don't fall into any one of the other buckets. All three of these cards, actually the Chase Freedom, the Capital One Saver, they have a $200 bonus after you spend a certain amount within the first 3 months. The reason why I like Discover, and I can say it even though I don't technically have a Discover card, it was new to me, but their bonus program is that they will match your points that accrue over the first 12 months. So the $200 bonus between Chase Freedom and the Capital One, let's say that equates to 20,000 points. If you're going to accrue over 20,000 points within a 12-month period, then Discover might be a good option to explore. But I can say from experience that I have the Chase Freedom. I don't believe it's the Freedom Flex, but very similar program. It's a good card. I have also a travel card for travel-related purposes. Here's the Discover, no annual fee, 5% cash back on certain items, Amazon, grocery stores, restaurants, gas stations, all things that are, a big part of what people spend their everyday money on. And again, unlimited cash back match within the first 12 months. They're going to look at all the points you accrue. They're going to double it. Here are your mid-range travel cards. Typically, when you see a travel card, there's also dining or food-related expenses kind of come hand in hand. So anything where you eat out a lot or you go to a lot of restaurants, you'll also benefit from a travel card. And here I have the Capital One Venture, Chase Sapphire Preferred, City Premier card. They all have very good bonus programs, so sign-up bonuses. They also have very good enhanced rewards programs. They all come with a $95 annual fee. However, and I may have touched on this earlier, that annual fee can typically be, recouped by understanding some of the underlying benefits provided. I think the Chase, the Venture, very likely the City, I can't say for sure, they offer, the free annual TSA pre-screening, cost, which can be anywhere from $75 to $100. They offer, I know Chase and Capital One offer a free travel voucher. They'll recoup travel-related expenses like baggage fees or seat upgrades to the tune of $100 per year, which again recovers that $95 annual fee. The two I focused on here, again, these two cards have a $60,000 point bonus out of the gates, $4,000 spent within the first 3 months, equates to about a $600, $600 in your pocket. Or in the case of using the points for travel-related purposes, the Chase Sapphire, you actually would receive about $750. Now, here are a few cards that come up pretty high across the board regarding of what site you're looking on or who you're paying attention to. These are the cards with the higher annual fee. The Capital One Venture X, almost $400. Chase Sapphire Reserve, $550. American Express Gold, $250. You can see the enhanced points, that are available on these cards. American Express being a little bit lower than these other two, but kind of provide a little bit more flexibility in areas where people spend more, like supermarkets, flights booked directly through American Express, restaurants. But I tend to, and I can say from experience, Chase, very good program. There's a lot of underlying ancillary benefits for owning the Chase Sapphire Reserve, such as rental car coverage. So there's no need to get extended coverage when you have a rental car. You get trip insurance. So if your trip is canceled or you need to cancel your trip for any reason, or underlying circumstance, you're fully reimbursed. If you have a layover flight and because of delays, you have to incur your own cost to put yourself up in a hotel, they'll recover costs associated with that, minus anything that the airline might provide. Baggage related insurance. So if your bags are lost in transit or destroyed or damaged, they'll recover costs associated with that. Again, I focused here on the Sapphire Reserve, another 60,000 points, which because of the higher cost card, you're going to get that 50% enhancement opposed to the 25%. So you can see here, if it's used for travel related purposes, that's a $900 value. You're going to get 3 times points on travel, dining. Whenever you use the points for travel related purposes, you get a 50% enhancement. You have no foreign transaction fees, trip delay reimbursement, like I mentioned. I could go on, but understanding the underlying benefits are important. I included the American Express here because of some of these, they go about it in a little bit of a different way to provide you with ways to recover the cost associated with the annual fee. Not a lot of people take advantage of these underlying benefits, like $120 a year Uber Cash to dine and ride. So $10 a month you can use to order food out. I think they look at it as a benefit. Uber looks at it as a benefit because typically people are going to spend more if they're going to order through Uber Eats. You also have a $120 dining credit at these 6 establishments, $10 a month. College students. To talk about cards that are geared specific to college students, that Capital One Saver card, which I mentioned earlier with the flexible spending categories. I think this is a very good card that's designed more for entry level. So this is a great card to look into, along with the Discover It. The Discover It is I had referenced some of the benefits associated with that, but these are 2 cards that are, very much entry level. And I think with any college student, you would want to set a credit limit. So work with them to establish a credit limit to make sure that they're not getting themselves into trouble. I didn't want to spend a lot of time focusing on airline specific cards because I do feel this is only specific to those that do travel on a regular basis. But if I live next to Philadelphia, American Airlines has a very big presence in the Philadelphia airport, but I travel maybe once a year, sometimes more. There's no reason for me to have an American Airlines card versus a more broad-based travel-related card. But if I am flying out, once a week, then I might look at using an American Airlines card because of all the perks associated with having that card through the airlines. So it really enhances your experience when flying. Retail specific credit cards, we've got 3 mentioned here. I know there are more. I believe you'd put Walmart up here, but I mean these are 3 that 2 out of the 3 I own. I don't necessarily use the Target card, but I know my wife does. And the Lowe's card I do own and I do use. So if these are retailers that you utilize, I mean, think of it as in all of these cases, it's a 5% discount on all items purchased through that retailer. That can be looked at as 5 points when used at that retail. With Lowe's, you also get 20% off when you open a new account. So typically, I mean, like most, I don't think I necessarily wanted another card in my wallet, but when you're purchasing a new refrigerator and you have a high cost associated with that 20% goes a long way. I would caution people that having a lot of retail specific credit cards, they are more susceptible to identity theft. So you have a situation like where Target, and I don't think Target has I believe they have come across it, but not recently, but Target has a security breach, and a lot of, you know, sensitive information is taken and, you know, pushed out on the web, and that could get into people's hands and, you know, cause issues down the road. With Lowe's, I experienced this with actually a client where the client had identity theft because an individual had his social, had his specific information, was able to walk into Lowe's without identification, but provide them with just his, you know, social security number, date of birth, and some other information, and they were able to charge items to his credit card without having a physical card and without having a physical ID. So that's something that, again, I don't think all retailers operate that way, but I know a few that do, and sometimes it's convenient when you don't have the card with you, but other times it can be you know, a headache when you find out that you have a, you know, $10,000 out on your Lowe's card and you haven't used it in months. So in recap, some of the things I talked about, I want to kind of refocus things. Sign up bonus, it's one of the main reasons, along with the ongoing rewards or point system. You know, it's one of the main reasons we use credit cards, you know, in general. And I say that because we wouldn't, and I think I mentioned earlier, without the points or the rewards, we might use cash. No, we'd probably use a debit card, which is just like using cash. It's without having to carry cold hard cash on you. But the rewards programs, understanding the programs, you know, using them to their fullest potential. Like I said, the one travel card provided me with, you know, full coverage with a rented car rental. You know, without knowing that, I'm spending, you know, a couple $100 when I rent a car for a week on vacation. So it pays for that annual cost. And so I really feel that a mid-range travel related card pays for itself if you go on one trip per year. If you go on more than one trip per year or fly more than once a year, the higher end cards are worth it. They're worth the annual cost. So sign up bonus, very important. I talked about the strategies where you know, a married couple might, you know, add each other on. They get their own separate cards, add each other on at a later date if they use cards from the same issuer. Bonus categories, again, some cards have bonus categories that rotate. Some have fixed bonus categories. Some have a bonus category that you can choose from, and it might be defaulted to gas. But if you want to switch it to grocery, you can. So that's why I say having multiple cards is beneficial. And I know individuals that, you know, may have 3 cards and they manage those cards very well. And they know what card they're pulling out of their wallet based on whatever it is that they're buying at that time to maximize the points. Point redemption is also important because not every point is worth a penny. In some cases, 1 point can be worth, you know, a fraction of a penny if redeemed for cash. But if redeemed for travel, it's worth more than a penny. So understanding that structure is, you know, uniquely valuable. Store specific cards, you know, I think they have a place, but make sure you're paying close attention to, you know, them on a month by month basis. I wouldn't necessarily just set it to have it, you know, pay the statement balance and just never log in to look at the account. You can go into any one of these accounts to set alerts so that if a charge is made above a certain dollar amount, you're notified. Doesn't mean it declines the card. It just means you're notified. You could also have it set to a, you know, a threshold where it declines if it, you know, a charge is made above $100. But I think the more you kind of manage the situation, the better. And if there's ever, you know, a question in your mind, you can always, you know, put a notice with the credit bureau, and you know, you'll be notified anytime somebody puts out or tries to receive a credit card that's using your information. Children, young students, think there's absolute value in adding them as an authorized user to teach them about the responsibilities of a credit card. What you can do is you can actually set thresholds on that authorized user card, to protect yourself. You could also potentially, use that card with them when you're purchasing certain items, simply to build up that usage history. But it's important to make sure that that's a card you are paying off, because you don't want to start that usage history, but then also start, the other ancillary factors that could affect their credit score. Here are some resources. We'll have this posted. If anybody has any questions, myself, the team, we're always here. I did a lot of research kind of leading into this. We came from an environment, some may call it a captive environment. I didn't call it a captive environment, but we came from a place where a client came to us with a need, like a credit card or an auto loan, and we could provide them with one option. We're now in a world where we can provide many options. It's very open. We're not benefiting, we're more advice driven. So it's to say that, the reason why certain retailers or certain institutions may not have come up when reviewing this information is because a lot of their benefits are through enhanced rewards when you actually bank through them. I don't think many people appreciate that, but to each their own. If you have any questions, concerns, don't hesitate to reach out. We're here for you. And again, I'd like to thank Anita for bringing this idea to our attention. This was an idea that a client brought to us, and we're always happy to, to post content on it. So thank you. Take care. We'll talk to you soon.
Thank you for watching our video. Please remember to subscribe to our YouTube channel. Look at our links below for ways of getting in contact us, and message us if you'd like us to add you to our monthly newsletter.